Hey guys, what's up? Myself Dhiraj Mondal, founder Deepanti Wealth Management. In today's video, I will be discussing a detailed business analysis of a company. So let's begin. Hi, I welcome to all of you to this session of detailed business analysis of a company named Piramal Enterprise Limited. So this is a company which is headed by the chairperson Mr. Ajay Piramal, and this company has a long period of time history, and the company is basically related to financial sector as well as pharma sector. Before 2021, we have seen there was one company named Piramal Enterprise, but after 2021 there was a demerger, and because of the demerger the company bifurcated into two sector, one finance and another one pharma. So what happened? What is Piramal Enterprise? The Piramal Enterprise Limited is one of the India's leading diversified non-banking financial companies worth $10 billion with a network of over 400 branches across 26 states and union territories, and it is offering some financial product like home loan and also offering pharma related service that is coming under the after demerger this company for Piramal Pharma Limited, another company established. So basically before pre-merger the Piramal Enterprise Limited was like this: financial service 55% revenue and Piramal Pharma Limited 45% revenue. They are basically two hands of the main company. Now under this Piramal finance service business, there was some business named Piramal Capital and Housing Finance Limited, PHL Fininvest, that is NBFC 100% acquired, then Shriram Capital Limited 20%, and Shriram City Union Finance Limited 10% share. So this is your financial business. And in the pharma business there is CCPL, that is Convergence Chemical Private Limited 100%, HPPL Hemo Pharmaceutical Private Limited 100%, and joint venture with Allergan 49%, and overseas subsidiaries 100%. So this is the structure. Now after demerger, what we are observing, the company bifurcated into two company, one Piramal Enterprise Limited and one Piramal Pharma Limited. Now under the Piramal Enterprise, Piramal Capital and Housing Finance Limited, then Shriram Capital and Shriram City Union Finance, and under this Pharma joint venture with Allergan and overseas subsidiaries. So this is the post demerger in 2021. Now mainly this company, why they are demerging? Because they want to focus on financial services separately and pharma business separately. So right now in the financial service, that is Piramal Enterprise, they are serving in the field of retail lending, wholesale lending, alternatives and investment. And Piramal Pharma Limited, they are serving contract development and manufacturing organization, complex hospital generics, India consumer healthcare and ophthalmology. So this is the two segment, and here revenue breakup: 45% coming from Piramal Enterprise and 50 for financial service, and 45% from financial pharma and 55% from financial services. This is your revenue breakup. In case of loan book, wholesale lending 34% and 66% and retail lending 34%. For pharma, 29% from coming from complex hospital generics, 62% CDMO and 9% India consumer healthcare. And revenue breakup is domestic revenue from 62% from domestic and international 38%. So this is all about the revenue breakup and all this. Here it is your in 2021-22 what is the changes that is seen here, and this slide is taken from investindia.in, and here you can see 1400 CR financial service and 1600 CR from pharma. So this company in 2021 when demerged, then if you have one Piramal Enterprise Limited share in your account, then you have got that 4 Piramal Pharma Limited share. So I hope it is clear, and the product are this product we are using daily life, lactocalamine, your polycrol, Ceridon. So these are the product which I have used in my daily life. You can see here Piramal Enterprise Limited, the product is mainly Piramal Capital and Housing Finance Limited, that is housing loan and all this. And you can see in 2021 September 2021 there was an update, 34,250 crore capital the company invest to acquire the DHFL. So DHFL acquisition was happened in this year. So this is all about the company overview. The company is right now working in the two segment, finance and pharma. So the product segment, Piramal Pharma Solution, critical care, consumer product, phytomedicine, and in financial service, Piramal Capital and Housing Finance, India Resurgence Fund, and these are the milestone from 2018 to 2025. The company has achieved lots of milestone, and as in this particular part we can say the company has a very attractive track record and the long history. So this company is existing in present day, and the company is a very huge growth potential in the field of pharma as well as finance. There is some award and recognition for financial services and pharma. You can read by pausing this video. The company business overview, let us discuss some positive points and some negative points. So diversified business model, post merger focus. After demerger of the pharma business, Piramal Enterprise Limited has focused on financial services, especially retail lending, housing finance, and alternative investment management. This strategic focus allows greater capital efficiency. So this is positive point as diversified business model we can see. The strong promoter group also we can see. It is led by Mr. Ajay Piramal, who is the chairperson of this particular Piramal group, and it has a strong promoter holding. You can see here in the screener, investor 46% share is in the promoter's hand, and well capitalized balance sheet. That means if we see that capital adequacy ratio and liquidity buffer after DHFL acquisition, then the company has a strong capital adequacy ratio. That is a very good point. And DHFL acquisition, retail lending expansion, we can see here as the company acquired DHFL, it is a ready-made retail lending platform. So branch network and customer base helping it shifts from wholesale to retail focus in NBFC. already building and all this branch network is established. So the company easily can focus on the expansion or the wholesale to retail focus NBFC the company can have. If I am discussing about the focus on technology driven lending, then investment in the tech and analytics to improve credit underwriting and risk management, particularly in mass affluent and affordable segment. Alternative asset management arm are there through Piramal Alternatives. They manage high yield private credit and retail estate focused fund, adding a fee based income model. Next positive point as enterprise, reduction of wholesale exposure. So ongoing effort to reduce exposure to wholesale retail estate lending, a positive step towards reducing concentration risk, and there is some regulatory compliance and governance. So it has improved the governance practice, transparency and communication post demerger, have enhanced investor confidence. So these are some positive points as enterprise, but there is some negative points. Let us discuss one by one. Legacy wholesale lending risk. So still the company holds significant legacy book from real estate wholesale loan, which can face asset quality issues in case of sector downturn. Next negative part, DHFL integration challenges. Despite benefit, the DHFL integration adds execution and operational challenges and brings potential NPA risk baggage. So you know that the DHFL was having some issue, some frauds appear. So because of that particular part, there is some negative sentiment on this particular company, and the company acquired this particular DHFL. So here execution and operational challenges will be there, and it can happen that potential NPA risk baggage. Intense competition in retail NBFC space. So you know that there is lots of competition with the bigger player like HDFC. So it faces a strong competition from HDFC, and HDFC Bank right now it is merged with HDFC. So HDFC Bank, Bajaj Finance and other fintech offering retail lending at a competitive rate. So the company has some limitation in this space because they have to fight with bigger player. There is some high credit risk profile. Despite diversification, Piramal's credit exposure remain a lower income group and real estate, which is riskier during economic slowdown. Next, volatile profitability. The earning remain volatile due to provisioning of a bad loan, transition cost and slower retail book growth. So we have seen the company has some issue related to profitability. In the balance sheet, you can see minus 2378, that is 2,378,000 minus 1500 CR, then plus 500 CR, then only 39 CR. So these are some things, some negative, that means the profitability of the company is volatile in nature, sometime minus, sometime plus. So this is also negative points. Next is your limited presence in asset light business model. Compared to some peer, PL is still really relies more on book lending than fee based asset light model. So with respect to its peer, the company is lacking here in this particular point, limited presence in asset light business model. Next, delayed scaling and in retail lending. That means though the company expanding, retail book growth has been slower than expected, and cross-sell upsell strategies are still being built out. The company has some perception overhang from DHFL brand. Despite rebranding effort, legacy perception issues from DHFL travel past may affect the investor or customer sentiment. As we know that there is some negative history of DHFL. Because of the legacy perception, the company will face some negative issue sentiment as they have acquired the DHFL brand. Now let us discuss as industry overview. Some positive points are retail NBFC industry tailwinds. So the Indian NBFC sector is expected to grow steadily due to credit demand from underserved segment, especially in tier 2, tier 3 cities. So here a positive points, the company has some business expansion scope, because in tier 2, tier 3 city there is a less attraction from the bigger player like HDFC Bank. So the company can acquire this particular category of people through some measures. PL with a DHFL retail lending platform is well placed to benefit from this demand. Basically, already some ready-made portfolio platform from DHFL the company achieved. So through this DHFL retail lending platform, the company can expand its business easily. Next point, positive point, government push for financial inclusion. As you know that there is some policy support from government like housing finance, affordable housing and financial inclusion directly benefit PL's focus area. Alternative investment on the rise. As Indian HNI, high net worth individuals and institutions increasingly explore alternative investment, PL's Piramal alternative investment is in a growing niche. So those who are HNI investor, high net worth individual investor or institution, they are exploring, they are diversifying their capital into alternative investment also. So in this segment, Piramal Enterprise Limited is a active player, so they can achieve that particular business from the HNI or institution. And there is some shift from wholesale to retail lending industry, the industry moving away from risky wholesale lending, a shift PL has adopted early, these aligning it with the sustainable growth trends in NBFC. So company has some positive point here, they can acquire this retail lending from by shifting the risky wholesale lending. High entry barrier in financial sector, you cannot open a financial NBFC with a few time, because there is some regulatory, industry has some regulation, capital required and compliance barrier. So PL long standing presence, brand trust and capital base gave it a competitive moat. So basically the company already in a certain level, which is a benefit for the company, because everyone cannot create a NBFC company with a fraction of time. Synergy with retail estate sector. As a financial services provider with historic real estate expertise, PL may gain from recovery in India's residential real estate market. So it is a synergy with real estate sector the company has. Now let us discuss about the negative point as industry overview. So here NBFC sector vulnerability. The NBFC industries in India is vulnerable to liquidity crisis as seen in IL&FS and DHFL cases. Being a non-banking lender, PL faces funding cost and liquidity mismatch risk. So this is a risk which the company is facing right now, and there is some rising competition as I discussed with Bajaj Finance, HDFC Bank and lots of other players. You can see here in the peer group there are Bajaj Finsab, Jio Financial, Bajaj Holding, Cholamandalam. Okay, so HDFC, AMC. So basically the Piramal Finance is this company has a strong peer group competition, we can see here. Now regulatory tightening by RBI. The RBI has increased scrutiny on NBFC, enforcing stricter capital adequacy, provisioning norms and governance, raising compliance cost. If the RBI is given some strict parameter on regulatory point of view, then compliance cost will be increased because of that particular regulatory issue. Now, high systematic risk in real estate lending. So that despite the diversification, PEL has real estate legacy loan. Real estate remains a systematically stressed sector, exposing PEL to industry-wide shocks. So there is some high systematic risk in real estate lending. The company may face this kind of challenges in the future. Cyclicality of credit growth. The credit growth is cyclical and interest rate sensitive. Any industry-wide slowdown affects disbursement, margins, and collection for players like PEL. So this is also a point which we need to remember. Cyclicality of credit growth. Sometimes it is demand is increased, sometimes demand is decreased. So because of that particular issue, company may face some margin growth or related things or profitability. Access to low cost capital is limited. Unlike banks, NBFC cannot accept deposit. As you know, in the bank you can open saving account so that the bank has some positive outlook to provide the loan, but NBFC cannot open the deposit or saving account, so they depend on market borrowings or bank funding, which are costlier and volatile. So NBFC is generally taking loan from the bank or market borrowing, some bond market or bank, they are taking loan. If they are not getting loan, then they cannot fund or they cannot provide loan to the retailers. So this is also a negative sign for NBFC. Let us discuss about the governance overview. Some positive points are diverse and experienced board composition. The company PEL board comprises individuals with extensive experience across various industries, and as of March 2021, women represents 36% of the board, exceeding statutory requirement. And the company has some robust governance framework. The company has created some committees related to audit and risk management committees, nomination and remuneration committee, stakeholders relationship committee, corporate social responsibility committee. So because of this new initiative, new committee, the company's governance framework will be in a good status, and the company wants to improve its governance or its brand value or trust. Through this committee, there are lots of solutions may arise in future. Let us discuss about the enterprise risk management system. The company employs an independent ERM system aligned with the COSO framework to identify, manage and mitigate business risk. So company has some framework named enterprise risk management. So it is a positive point as governance. Next, commitment to ESG principle. The company has instituted a sustainability and risk management committee to oversee ESG initiative, emphasizing transparency and ethical practices. There is some whistleblower policy. A vigilant mechanism is in place, allowing directors and employees to report unethical behavior securely. This is a very good point for governance point of view. Some whistleblower policy company started. There is some negative news or negative points which you need to remember when you are going to invest in this particular company. There is some regulatory compliance concern. In April 2024, SEBI issued an administrative warning to Piramal Enterprise Limited on non-compliances related to the disclosure of stake sales in Shriram Finance, indicating lapses in recognizing unpublished price-sensitive information. So this is a huge regulatory compliance. The company basically without any disclosure, company sold its stake in Shriram Finance. It is unethical practice. Next, tax disputes. In March 2025, PL received a notice announcing 1502 crore of concerning the sales of its pharma business, with authorities disputing the nature of transaction. Very important point, as negative point you can see, because these are some very serious allegation on the company. 1500 crore of sales tax notice you can see here. Next concern point, employee feedback on management practices. Some employee has reported issues such as delayed payments, lack of transparency and inadequate HR process, suggesting areas where internal governance could be strengthened. So as the company employee is not satisfied with their business, how can they grow? So these are some negative points, keep it in your mind. Now let us discuss about the financials. As positive point is robust growth in retail lending. We have seen the asset under management surged 43% year on year, reaching 50,000 crore, now constituting 72% of total asset under management, in retail asset under management actually. So retail lending book is increased, and the shift indicates a strategic move towards a more stable and diversified retail lending portfolio. Very important point as positive point. Next is your improved asset quality. Gross non-performing asset is reduced to 2.8% in Q1 FY 21-25 from 3.8% in previous quarter. How you can see in the balance sheet, you can see here the NPA and all this thing. You can see the NPA is reduced 3.08 to 2.83%. So the NPA is decreased. That is a good point. Improved asset, that means quality of the asset is getting improved. Now the net NPA declined to 1.5%, reflecting better credit risk management. That means the company is gradually decreasing its NPA, non-performing asset, which is a good sign. That means the EMI or the loan book, the company, whatever the loan is given to the retailer, the money is coming in the company's hand. There is a strong capital adequacy ratio, 25% capital adequacy ratio. A maintained capital adequacy ratio 25.6%, providing a solid buffer and future growth in the risk absorption. Very good capital adequacy ratio. Next, reduction of cost of fund. What do you mean by cost of fund? The cost of fund decreased to 6.4% in Q1 FY25 from 7.2% in the previous year, aided by increased scrutinization and international borrowings. Basically, the company is taking some international borrowings, so that the cost of the fund or cost of the borrowing is decreased, as well as, that means 100 rupees you are investing somewhere, but if you are 100 rupees, from your 100 rupees your previously your cost of the, that means to get back that 100 rupees to your bank account from loan, then you are maybe 10% money is spent on the as cost of fund, but right now 6.4%. That means for 100 rupees you are investing, your expenses is 6.4 rupees. So that is a very good sign. From 7.2% to 6.4% cost of fund, it is a very good number. Again I am telling what is cost of fund. Cost of fund means I have an NBFC company and I am providing some loan to the retailer. Now I need some office to give the loan, that means some paperwork may be required. Then through some credit officer the money has to be collected to my bank or to my NBFC. So what is happening, if I am giving loan to someone, then 6.4 rupees right now my expenses for office expenses, electricity, everything, that means my employee cost, everything is included here. So I am getting, I am right, initially it was 7.2%, right now 6.4%. That means a very good sign for cost of fund. I have reduced the cost of fund. Now next is your operational efficiency. Pre-provision operating profit increased 3% year on year to 270 CR in Q1 FY25, indicating stable core operational performance. This is a very important point. Whenever a company is providing some loan, then maybe some EMI or some loan, the EMI is not getting back. So what happened? Every final quarter the company has to release its results. So if the money is not coming into company's bank account, then there is some the NPA. It is NPA, the number, it is reflected in the provisioning. That means this money is not performing, but it is the company's money. So we have to find the pre-provisioning operating profit and provisioning operating profit. So provision means the NPA number, the NPA money, non-performing asset which is not performing. So we have to take it in the balance sheet through provision. So pre-provision, before provision, the company's profit increased 3% year on year to 270 CR. Next is your negative point. This is a positive point, and negative point is your significant decline in net profit. The net profit I have seen dropped 64% year on year to 181 CR in Q1 FY25, primarily due to absence on a one-time gain from the previous year. So the company's balance sheet showing that there is some net profit decline. Here the company's 64% year on year net profit in quarter 1 FY25. See here in the quarterly result, the company's net profit, how it is declined from 181 to 163, then 139. So this is a negative points from the as financials. So in the financial negative point is this, and primarily due to absence of one-time gain from previous year. So here a significant decline in net profit quarterly basis we have seen. Compression in net interest margin. Net interest margin means if I am taking some loan like 5% and I am providing loan to others by 14%, then this 10% is the net interest margin. So in the bank account, when you are creating one as a saving account, then you are investing your money or depositing your money in the bank account, you are getting 3% as interest, and the bank is providing loan to the borrower by 13%, then 10% is the net interest margin of the bank. So this is the NIM narrowed to 6.7% from 7.3% in the same quarter last year, reflecting pressure on lending spreads. That means net interest margin decrease means it is a negative sign. The company's earning is going to be affected. Next negative point, legacy portfolio challenges. The legacy business reported a loss of 1351 CR in Q4 FY24 due to increased credit cost from accelerated rundown. The legacy AUM, asset under management, reduced from 18,700 CR to 14,500 CR during the last quarter, indicating ongoing challenges in asset resolution. So the company has some losses and asset under management is reduced, we can see here. So this is a legacy portfolio challenges as negative point in financial viewpoint. Next is your increased borrowing cost. The borrowing cost of the company is increased 8.9%, a 20 basis point increased quarter on quarter, potentially impacted future profitability. If I am taking borrowing from the other source like bank or overseas from abroad, then the borrowing cost is basically 8.9%, which is also in increasing order. That is not a good sign. Next is your regulatory and operational risk. The disbursement were impacted in Q1 FY25 due to regulatory changes around fair practices, which may affect short-term growth target. The company's short-term growth target may affect due to the disbursement of, that means it was impacted, disbursement were impacted in Q1 FY25 due to regulatory changes. So these are some negative points, and in the financial loss, a number of negative points we have seen here. So this is a concern for the company. Next, coming to the valuation part, which is very important, whether we should invest or not. That is the main conclusion will be coming right now in the valuation part. So this is not a positive point, it is a not positive not negative, a mediocre point, that is reasonable valued based on the intrinsic value model. So discounted cash flow analysis estimates PL's intrinsic value is 1106.6, which is suggesting a reasonable price from current market price is 1102. As I am recording this video, this current market price is 1102. So here the company is basically a discount cash flow method. From discount cash flow method, the company valuation is okay. In case of price to book value ratio, it is also reasonable, it is also okay, but not positive not negative. The P by B ratio, profit to book value ratio, is 0.9. It is indicating that stock is trading little above its 5-year and 3-year median P to book value of 0.7. How you can see here? You can see here in the profit to book value ratio, and it is median P is your 5-year median P is your 0.7. Right now the company is trading at 0.9. So this is a also not positive not negative, little bit higher, this little bit higher valuation, but it is okay. This is 28% premium compared to its own median PE, but PR median, if I am talking about the PR group, then the median is your 1.7, which is showing 54% discount price compared to its PR group, potentially signaling undervaluation. So with respect to the PR group, if you are seeing here 1.7 is your median PE, profit to book value, but the company's P is your 0.9. With respect to its PR group, the company is trading in a discount price. Only positive point as valuation part. This is the only positive point. Now the negative points are: analyst price target suggests moderate downside. Analysts are saying that the target would be 951, which is 14% from the current market price, and higher price to earning ratio. You know that company's price to earning ratio 51.3, significant higher than the industry of the approximately 22. The stock is basically overvalued related to PE. You can see here the PE of the company is 51. The PE of the company is your 51, and the median PE is your 21 or 22, and rest of the company, PR group company, they have lower PE compared to the Piramal Enterprise Limited. So this is a negative point. The PE multiple is based on PE multiple, the company is overvalued. Then negative earning per share, the minus 75 rupees earning per share, it is a negative point. How you can see? Come to the profit loss statement, minus 74.9 is your earning per share. Now it is increased in the coming in the March 2025. Earning per share of the company is not so attractive, so that is why this is a concern. Analyst consensus indicate overvaluation. Analysts are saying, few analysts like Guru Focus saying that 594 is company's target price, that is 41% below the current market price, suggesting potential overvaluation. If I am talking about the moving average valuation, overvaluation, then company's 200-day moving average and 50-day moving average are 1003, which is 10% below the current market price. So you can see here in this chart, 200-day and 5 moving average and 50-day moving average is your 1000 near about, and the company is your overvalued. You can see here in this chart also. This is the moving average. This is the moving average, 50-day moving average and 200-day moving average. The company is 50-day moving average is your 1003, 200-day 1003, and company is trading 1104. This is 10% higher than the current market price, lower than the current market price. The moving average, that means based on the moving average also the company is overvalued. So this is all about the financial parameter, the ratios you can see here. Then quarterly result, you can see the quarterly result is right now the company is 181 CR to down, it is 39 CR, then 102, little bit last quarter the profit book is increased, but operating profit, most important, financial profit or operating profit, it is negative. So the company is adjusting with the other income. This is not a positive sign. So the company's operating profit is your minus 100 CR. This is not a good sign. Let us see in the coming quarter what is the expected, what is the result is coming. Next, in the profit loss statement yearly basis, the company is a lowest profit, because we can see here 3,456 year profit in 2021, and right now then it is in 2023 5900, that means 5,900 CR. Right now it is 645 CR. It is relatively very low profitability, or you can see here 9,961 to 485. So company's profitability is increasing as well as earning per share is in the positive track, but you have to wait to see in the future. The company's balance sheet, the borrowing and all these things you can see from here. Cash flow statement, you can see the negative cash flow statement for NBFC banks. It is not it is okay, no issue, but in the company's shareholding pattern, you can see here the public in the public hand 22%, and the DII little bit increased is its shareholding pattern showing like this. FII decreased and promoter as it is. So the negative and positive points I have discussed, you can read over here also. These are the peer comparison. And long term view, let us discuss. You can see the company is making a complex reverse head and shoulder pattern, and because of this company's long term target growth, long term potential growth is your 32% based on this cup with handle or reverse head and shoulder pattern. 32% from current market level, that is 1456.8 is the target price for long term. You can see this is how the company's price chart is moving, like higher high, higher low, higher high, higher low, like this. So this is how the company may reach to this number 1456. So this is 32% from current market price. But short term view, let us discuss. In the short term view, you can see the company is in the downward trend, and what happened actually, if this particular break to 1270, this particular price it is broke, then there might be some growth or positive outlook. This is a very good breakout. We will see here, if it is reaching this point and if there is some breakout, then the company may reach 1456. But right now the company's target is your minus 18% short term target, and short to mid is your minus 23%. But here you can see here the company is little bit bullish here in this particular area, but let us see, we will wait for the breakout. Conclusion: as per the overall business analysis, that we can conclude the company was facing some business issue as well as governance issue, which is reflected in the balance sheet, resulting sales down and contraction of EPS as negative. But recent quarterly result showing of 2854 CR of sales, which is improved compared to previous quarter, and EPS also improved from minus 75 to 22 per share year on year. It is observed the quarterly net profit of the company was down, but recent quarterly result of net profit showing 102 CR, which is improved compared to previous quarter like 39 CR. But still we should wait for the small correction due to overvaluation based on different valuation ratio. Hence we are expecting 32 to 48% gain within 2 to 3 years from current market price of 1103, after a short term correction of 18 to 23% from current market price. So let us give the ratings. This is the company's NSE code PEL, BSE code 500302. Finance sector, small cap company. Today's date is your 16th of May 2025, and rating is your 6.8 out of 10. That is average, because from business point of view it is the company scored 8 out of 10. From industry point of view 9 out of 10. Governance parameter 7 out of 10. Very bad governance we have seen in the previous year. And financial parameter, the financial is also very bad, 6 out of 10. And valuation parameter 4 out of 10. That means the company is in the higher valuation range. So we will not invest right now. We will see whether the profitability is improved in the coming quarter or not. I hope you have enjoyed my video. If it is added some value in your life, don't forget to subscribe my channel Dhiraj Mondal and press the bell icon to get everyday notification. And also there is no buy and sell recommendation. This video is only for educational purpose. Thank you.